Today is one of my main businesses, which is freight mergers. It's part of the group. We've got recruitment, mergers and acquisitions, and advertising and marketing. So pretty much everything we do is about growth. It's about growing your business. There's three ways to grow a business. It's your recruitment, your marketing, and your advertising, and your mergers and acquisitions. So you acquire smaller companies to grow. You bolt them onto your business. So we've got a journey here. Our strapline is your strategic growth partner. So we help all of you with your growth strategy. One of the most important things is the people. I'm sure you'll agree the people is very important. Then obviously on top of the people, we've got the marketing, so that they've got loads of inquiries and loads of leads and loads of networking opportunities. And then on top of that, we sell smaller businesses to larger businesses. So we help people throughout their journey to a final exit strategy. So, what are the motives for buying a company? The main motives are, well, you might want to break into a new vertical, ship to a new country, grow for future growth, increase your own market share. You might buy a competitor. There might be a thorn in your side and you might think, I wouldn't mind having them. So you buy them, right? Additional client base, new locations. You might want to ship to a new country. I bought in a new seller this morning in Indonesia. So if anyone wants to buy a company in Indonesia, I'm your man. So yeah, we do global M&A. So motives for selling. Why would someone want to sell their business? Well, they might want to, change their lifestyle, the work-life balance. They might want to raise funds. They might want to equity release. They might want to cash some chips in. It's just to help other companies grow. They might want some funds injected to the business to help it grow. Then there's obviously the retirement side of it. There's a lot of people there registered with me as a seller who have just got to the stage where they want to retire and they want to go and sip cocktails somewhere. So they come to me and say, look, I want to sell my business. And then I obviously put it onto the market for them. So my aim is obviously to work with sellers and get them the optimum value for their business. I normally work on what's called a sell side mandate. We do the occasional buy side mandate, but predominantly a sell side mandate. So how do we value a business? This is the key question, and probably the most common one I get asked. It's a multiple of the EBITDA, which is the earnings before interest and tax. So it's your net profit, pretty much, right? So with adjustments. So if you're leaving the business, we can take your costs out, we can adjust that up, then they apply a multiple, and then any spare cash in bank that you don't need to operate the business, and then the assets. So that's the value of the business, and it's done through what's called an earn-out. So you would have a percentage payment up front, and normally an earn-out would last 2 years. So you can't just throw the keys at someone, you've got to hang around for a couple of years before you can leave the business. So the process, this is how we work. If we're working on a sell side and we're selling your business for you, we prepare something that's called a teaser document. You've all seen our emails at Headford, I'm sure. We're always emailing people, but we prepare something called a teaser document. And it's an overview of the business. It doesn't give away who the company is. It doesn't give away who the seller is, but it's enough to stimulate the interest and create some interest from a buyer. So we would send that out. We've got a list of 700 buyers, by the way, now. So we've got 700 investors that are looking to invest in the freight industry. And that's various different buyers, venture capitalists, private investors, but most of them are trade buyers. They're looking to grow. The best way to grow a freight forwarding business is buy another one, as DSV will tell you, right? Okay, so we send out what's called a teaser document, a basic overview. Then we prepare what's called an information memorandum. An information memorandum is a company brochure, but with all your financials in it. It tells any interested party exactly how much money you make, what you pay your staff, who they are, who the key players are, how engaged they are with the business, how long they've been there, etc. So we'd have that ready. The teaser goes out to the 700 investors. And then once the teaser's gone out, typically we would get 30, 40, 50 people come back and say, yeah, that company's of interest to me. I'd be interested in buying that business. Okay? So we get you a shortlist normally within 4 weeks. From standstill start, we'll get you a shortlist of 40 to 50 interested parties. What I do then is I then send you that shortlist of interested parties, and you say to me, right, they're my top 5. We can do 10, we can do 20 if you want, but I normally keep it to the top 5. And the reason I do that is because the meetings tend to last about an hour and a half, and we try to do them in the same week. So we do one a day, and then on a Friday I'll get together with you and I say, right, what did you think of that lot? Who's your favourite? Well, they're fresh in your mind, and you've got an immediate comparison of the businesses looking to buy you. Okay? So we would typically we would put it out to, like I say, we've got 700, but I'd probably put it out initially to a couple of hundred. I don't want to overkill it. I want to make sure it's strategic. I would ask you questions like, what would the ideal buyer look like? What country would they be in? Do you want an overseas investor? Do you want a UK investor? So I would narrow it down my own search straight away by asking you what the ideal buyer would look like. Try and get that down to about 200. Send out the teaser document. Then I'd get you 30, 40, maybe even 50 serious buyers on a list. Then we'd arrange the meetings, which I was discussing with you. Normally off of those meetings, we would generate 4 to 6 offers, or bids as we call them, because it's a bidding process. If we're working on a sell side mandate, we put the business out to bids, which is how we get you optimum value for your business if you're a seller. Okay? And then obviously at the end of it, there's an offer that you're happy with because of the synergy and the value of the business that you've been offered. So does anybody have any questions on M&A?